The data is saying something I think that is fundamentally sound. We want to talk a little bit more. I mentioned the economic indicators as a whole up front. Let's deep dive into a couple of them to see really where we think the economy is going moving forward. So first, let's talk about inflation. When we look at this chart, this to me is amazing. When we go back to 2015 and you see, those years from 2015 to 2020, we were so used to low inflation.
Yeah, we were.
And you may not remember it as inflation, but think of what you could get in your savings or money market accounts at a bank. Zero. Because rates were so low. Inflation was so low.
Yeah, that's true.
And it actually goes back before 2015. You can track this back to about 2012, 2013. So we experienced a good 10 years or so of very low, unusually low inflation. But then look what happened in 2021 and 2022. Government printed a bunch of money. They threw that money out there. They funded a lot of things. And the bottom line is we had to absorb that in the economy. And that's what's been going on. You saw the Feds raise interest rates over 5.5% inside of 12 months. That's never been seen before. Okay. But that I think contributed a lot to the slowing of inflation. We've got inflation down. Look at the last 3 years that things have turned around. We've got a very good start to 2025. If you look at the numbers at the bottom of the chart, from January through April, inflation is slowing on a month-by-month basis. We're probably going to bottom out in this 2.3, 2.4 range. We may see a spike 1 month here and there because, again, it's not going to be steady. There's a lot of factors involved in the inflation calculation, but we do believe that inflation is coming in check, and that's a positive for the future and the growth of the economy in the United States. Second thing, jobs and unemployment. What do we see going on there? The economy recently added 228,000 jobs in March, beating a forecast of about 140,000. So if the job market can stay strong, Dan, unemployment can stay relatively low. When we look at the unemployment rate, yes, it ticked up a little bit into March from February. However, one thing you have to remember is this is also kind of seasonal. We tend to see 2 seasons a year where the unemployment increases because more people are looking for a job, okay? And that tends to be in the spring and the fall, okay? So we expect a little bit of an increase just because there's more people looking for a job, okay? So we expect these numbers to slightly go up. But if you look historically at a 4.5, 4.6 historic unemployment rate, we're low.
Yeah, this number is not a bad number at all.
So this is looking good. So we're kind of seeing some good trends here in the jobs and the unemployment numbers looking forward for the rest of the year. Another thing that this falls right into where we just came from, talking about jobs and unemployment, is how do consumers feel about spending and how are they spending in the economy? When you look at December 2024, the month-over-month change for December was 0.9. January, it dropped to 0. Okay, so we didn't see any growth in consumer spending month over month from December to January. That was one of the reasons you might have heard some economists, Dan, talk about a potential recession.
Right.
If there's no spending, then corporations are going to have to cut back. If they're cutting back, there's less investment, there's possible layoffs. But look what happened in February and March. We're starting to see recovery in consumer spending, which also tells me that how the consumer feels about the economy. So if they're spending and willing to spend, then that's a good sign. They feel good about the economy and they're actually spending money.
Yeah, well, that's interesting too, because the University of Michigan's sentiment report came out a bit on the downside over the last couple of months, and this might be part of the indicator as to why.
Right. So, but it's kind of like also separating a little bit. consumers may not feel as good about the economy.
But they're still spending.
Yes.
Good point.
So it's don't do as I say, it's do as I do. So the consumer feels confident because they're working and their paycheck is increasing and keeping pace or outpacing inflation. So we expect things to be moving good. So as we recap kind of where we are sitting right now in May, looking at what's happened in the last couple months and then looking forward for what we expect for the rest of this year. March, job numbers were stronger than expected, even though the unemployment rate kind of ticked up a little bit, but that's normal. Wage growth is steady. We love that. Inflation is low. Okay, we've actually gone under now the Fed target of 2.5%. So that's
their secondary target.
Yeah, that's
their adjusted target.
So we're feeling good about that. Consumer spending is starting to pick up. That tells me the consumer is feeling more confident about the market. You're also seeing that reflected in the market numbers. Why as your 401ks bouncing back from where we were at the beginning of February to now.
And this is great right here.
Yeah, and you can't beat this. If corporate earnings are coming in and beating the estimates, that's telling people you need to be owning stocks.